Could we be standing on the edge of a financial apocalypse? Charlie Munger, the billionaire investor and right-hand man to Warren Buffett, thinks so. He's predicting a major recession and warns that the US dollar itself could collapse. What? Because of rampant money printing and inflation. But what does this mean for you, and how can you prepare before it's too late? Let's dive into Munger's chilling prediction and his advice for surviving the coming storm. Hey everyone, welcome back to the channel. If you're new here, I'm your guide on achieving your financial goals, and today we're talking about something big. Charlie Munger, one of the greatest financial minds of our time, believes that the current financial system is in serious trouble. He's predicting a major recession and even a potential collapse of the US dollar. Sounds terrifying, right? Well, don't worry, in today's video we'll break down Munger's warning and, more importantly, what you can do to protect your hard-earned money. So stick around because this could be the most important financial advice you'll hear this year.
Economy sometimes booms and sometimes it doesn't. And you have to live your life through both episodes. And our attitude is we just keep swimming, and sometimes the tide is with us and sometimes against. But we keep swimming either way.
Are you surprised by how long this expansion has lasted?
Of course, it's lasted a long time. But what was really remarkable is that we never printed money so much and spent it so fast and bought back so much debt, public and private. So this is total terra incognita in economics. And nobody knew for sure how it was going to work.
So is it risky then?
Of course it was risky, but it worked. And I don't think they had much else that would work. They weren't set up to do stimulus. Too much controversy, democratic inertias, various kinds. So they had to do something. And all they had left was just to print money and start buying things. And that's what they did. And it turned out to be a very wise response. And what's even more remarkable is that both Congress and the presidency and under both parties made the same decision. They all cooperated. It was the last time.
But where is that going to leave us, ultimately?
Well, it left us licking the Great Recession. So maybe we ought to try cooperation again since it worked so well once.
Let's start with Munger's first major point. The U.S. financial system is unsustainable. But why? According to Munger, one of the main culprits is the government's aggressive money printing. Think of it like this. When more dollars are created out of thin air, it doesn't increase the wealth in the economy, it just spreads that wealth more thinly across each dollar that's already in circulation. This leads to inflation, where the prices of everyday goods and services go up, and the purchasing power of your money goes down. Here's the problem. Inflation erodes the value of every dollar in your wallet. That $100 you have today? In an inflationary environment, it might only buy you $80 worth of goods in a year or two. And the more money the government prints, the worse it gets. It's like trying to fill a swimming pool with a leaky bucket. No matter how much water, or in this case money, you pour in, the value is constantly leaking out, making it impossible to keep up. But it's not just about higher prices. Inflation can spiral out of control if left unchecked. Imagine a scenario where the value of the dollar plummets so fast that people lose faith in the currency itself. That's what Munger is warning us about. The potential collapse of the US dollar as the world's reserve currency. If that happens, it could cause chaos in global markets, and the ripple effect would impact everything from trade to investments. And it's not a far-fetched idea. History is full of examples where hyperinflation has led to economic collapse. Just look at Zimbabwe in the 2000s or Venezuela more recently. Their governments printed massive amounts of money, and before long, their currencies were worth almost nothing. Munger believes that if the US keeps printing money like there's no tomorrow, we could face a similar fate. In fact, the US has printed more than 40% of all dollars in existence just in the last couple of years. Think about that for a second. More money in circulation means the value of each dollar drops. Munger believes this is a recipe for disaster, and he's not alone. Many economists share his concerns. But inflation isn't just about higher prices at the grocery store. It's much bigger than that. It affects everything, from the value of your savings to the cost of housing. So how does this tie into the collapse of the dollar? Munger says that if we continue down this path, the US dollar could lose its status as the world's reserve currency. And when that happens, the whole global financial system could unravel. Another trend that Munger sees as dangerous is the rise of passive investing. You've probably heard of index funds, right? They've become incredibly popular in recent years, But Munger warns that too much passive investing can distort the market. Here's why. When people invest passively, they're buying stocks without considering the true value of the companies. This can create bubbles where stock prices don't reflect reality. And we all know what happens to bubbles, they eventually pop. Munger believes that passive investing is fueling the next big bubble, and when it bursts, it could lead to even more instability in the financial markets. So, what can you do to protect yourself from all this? Munger has some advice, and it's all about investing smart. First and foremost, he recommends putting your money into high-quality assets, companies with strong fundamentals that are consistently profitable. These aren't the trendy tech stocks that shoot up overnight, they're the companies that provide essential goods and services, things people rely on no matter what's happening in the economy. Think about it. No matter how tough the economy gets, people still need electricity, healthcare, and food. These types of businesses tend to be more resilient during economic downturns because they offer products and services that are essential to everyday life. By investing in companies that are built to withstand economic turbulence, you're safeguarding your portfolio from the worst effects of inflation and market crashes. He also suggests investing in assets that tend to hold their value during inflation, such as real estate or even commodities like gold. But here's the key. Whatever you do, make sure your investments are diversified. Don't put all your eggs in one basket. And finally, Munger emphasizes having a long-term perspective. This isn't about getting rich quick. It's about weathering the storm and coming out stronger on the other side. The markets may crash, but over time they recover, and the patient investor reaps the rewards. Now, I want to hear from you. Do you think Charlie Munger is right? Is the US dollar heading for collapse, or will the economy bounce back stronger than ever? Let me know your thoughts in the comments below. And while you're down there, don't forget to hit the like button if you're finding this video helpful so far. Every like helps more people find this video, and it really supports the channel.